The shift to cord cutting is happening, and the 2020s will likely be the decade of streaming. Cable TV is going away, and Roku could be the biggest beneficiary of this shift. Roku was the hottest tech stock of 2019, soaring over 300%. This year, Roku's stock price dropped under $60 during the market crash in March, and now trades for around $150 per share. In this Roku stock analysis, you'll learn about their story, market, growth opportunities, and I'll give you my valuation for what I believe their stock is worth. If you'd like to see more valuations like this one, go ahead and like this video and subscribe to my channel. It would mean a lot. I really appreciate your support. Rather than pay billions of dollars on original content like Netflix, Disney, and Amazon, Roku strategically made a decision to stay out of the streaming wars. Instead, Roku positioned itself to be the biggest winner from the streaming wars and the shift from cable TV to streaming content. They did this by becoming the top content distribution platform for all of the streaming services. Companies need Roku in order to distribute their content to streamers at scale, and Roku has a 36% lead over the second most popular TV streaming platform. The primary reason consumers move to streaming is because it's a better value proposition than traditional cable. You get a bigger selection of content at a much lower price. With a streaming device like a Roku, you can watch free TV from over 1,000 channels or pay for a few streaming services like Netflix, ESPN, Disney, and Hulu for $25 a month. All you need is a $29 Roku streaming stick or a smart TV. Roku users who cut the cord save approximately $75 per month on their TV bill. There are over 40 million households who use a Roku device for streaming. Roku gains market share by selling streaming players and licensing TVs with the Roku operating system. 1/3 of the smart TVs sold in the United States are Roku-powered TVs, and Roku expects all smart TVs to end up licensing around 1 or 2 operating systems, just like other popular devices. Windows became the dominating operating system for PCs, iOS and Android dominate smartphones, and Roku is the #1 operating system for TVs. While it's easy to think of Roku as a hardware company, you should actually think of them as an advertising company because that's how they make most of their money. Streaming players and Roku-powered smart TVs is how they grow their customers, but ads and content distribution is how they monetize the company. Roku makes money from advertising in a few different ways. You can watch TV for free on Roku, but it's ad-supported. They sell advertising through the Roku channel and more than 1,000 other apps available within the Roku ecosystem. The second way they make money is through content distribution. If you sign up for Netflix on Roku, then Roku gets a share of that revenue. There's also Roku home screen ads for bigger brands like Disney. Disney's home screen ad played an important role in their successful launch of the new Disney Plus channel. That's my story for Roku. Now let's take a look at how much they can grow and how much they're worth. Since 2002, Roku has built a billion-dollar company, but there's still lots of room for growth. Over 90% of their revenue is from the United States. There's lots of room for international expansion. For example, Netflix saw its international subscriber base grow from under 11 million in 2013 to 115 million in 2019. In my 10-year discounted cash flow valuation, I estimated Roku earned $16 billion in revenue in 2029, with 200 million active accounts and an $80 average revenue per user. Here's how I got to those numbers. To estimate revenue, I looked at global TV advertising spend. Less than 5% of the global 180 billion TV ad dollars is going to streaming. I think 10 years from now, this will likely be the other way around, with 80% of TV ad dollars going to streaming and 20% going to traditional TV. From the 2019 shareholder letter, Roku predicts a similar trend by estimating that by 2024, roughly half of all US TV households will have cut the cord or never had traditional pay TV. By 2029, global TV ad spend should reach at least $200 billion. If 80% of TV ad dollars goes to streaming, that's $160 billion towards streaming. Of course, this doesn't mean Roku will get all of this streaming ad revenue if this does happen. Besides Roku, Amazon, YouTube, and Hulu pull in the most ad revenue in the streaming space. I estimated Roku captures 10% of all streaming ad spend, which means Roku earns $16 billion in revenue. Here's what Roku's CEO said about their market opportunity. I mean, there's a lot of room for Roku to grow, both domestically and internationally. There are probably 1 billion households around the world that have broadband, and they are all going to switch to streaming. I estimated Roku grabs 20% market share of 1 billion global TV households in 2029. Roku has 40 million active accounts, which grew 37% year over year. To get to 200 million active accounts or households, Roku would need to grow households at a 17% compounded annual growth rate. $16 billion in revenue divided by 200 million households is how I got to an $80 average revenue per user. Roku's current average revenue per user is around $25, but it's been climbing year over year, and there's no signs of stopping anytime soon. Roku forecasts that their average revenue per user will continue to go up by saying, "We believe that we have a significant opportunity to grow platform revenue, and as we further monetize streaming hours, we believe we will increase ARPU." Streaming hours is a key performance metric, and Roku drives more value as streaming hours increases. Ad dollars follow engagement. The final key number for my valuation is operating margin. I estimate operating margin at 20% when Roku matures because I think Roku's margins can be comparable to Google's ad business in the long term. Roku's advertising business gets a 56% gross margin, and I expect that number to climb up as advertising becomes a bigger revenue driver for Roku. After inputting the numbers on my spreadsheet, my intrinsic value for Roku is $130 per share. Roku is trading around $150 as of this recording. My story and numbers are bullish for Roku, so I believe there's lots of future growth already priced into the stock. While I think the market cap for this stock is a bit rich, Roku is a great long-term investment opportunity if you can hold it for 5 to 10 years, and it wouldn't surprise me to see the stock 5x during that time. I have Roku earning $16 billion in 2029. So if Roku is trading at a price to sales multiple of 5, then the company would be worth $80 billion. Roku currently trades at a 14 price to sales multiple. If you enjoyed this valuation, I'd appreciate if you like this video and subscribe to my channel. In the comments below, let me know if you believe in my story or disagree. As always, bulls and bears are welcome. Thanks for watching.